Hey guys, it's Kieran. I'm just going to do a quick market update. Looking at the Bitcoin chart, we've pretty much been in this sideways range for almost 2 weeks now. And very often what happens is, if you find yourself trading the middle of these ranges, you can get absolutely chopped up. And so looking at this specifically, we started this range around the 17th of March. So I'm going to draw a fixed range from where we found support initially here. I'm going to draw all the way to here. Last night we had this fake out here, but then we came back into the middle of this range yet again, and now we've heading back to this point of control. And for 2 weeks now, we've just pretty much just been dancing. And of course, we've played some really good false breaks to the upside and some nice false breaks to the downside. But you have to appreciate that if you're going to keep banging on a door on either side, eventually the door is going to break. After 4 or 5 attempts at false breaks on either side of the range, how many times is it going to have false breaks? Eventually the range has to break. And so if we do get breaks to the downside in this case, I'm not really interested in any more false breaks or playing any long positions if we get some kind of deviation play yet again like this. And conversely, if we do get a break to the upside, I'm not interested in any more false breaks because beyond 4 or 5 times, it's just taking the piss, to be honest. So eventually you would expect some kind of break to the upside. But in this particular range, so of course this middle section here is the value area range. And so this is an area of, it's like an auction process, Bitcoin. In the middle of this, pretty much is fair value. But as you get to the extremities of this range, then it becomes more appealing because you're buying away from fair value. And so you're more interested in shorts as you get further away from here. And you're more interested in longs as you get further in here. And in the middle of this range, it's a bit more difficult to trade. Perhaps reduce your position sizing, or if you've got a really specific mechanical scalping strategy where you get in and get out, then that's completely fine. But you have to appreciate that it's very easy to get nice trades at the extremes of the range, but then get completely chopped up and rinsed in the middle and give away all your profits. But it was quite nice how last night specifically, I actually kind of did expect it to slightly break, at least to get to one of the 27.1 region. But we seem to have slightly front runner gone short of it. We didn't actually reach that 2700 region. Now we've gone back above the value area low, and we're pretty much now at this point of control. Question now is, do we actually make a leg up to this value area high around 28,500? This has been quite an interesting level. In terms of actual key levels, nothing has really changed specifically since my last live stream. And of course we have the daily open of today, which is around 27.8k daily open, and we now have a new monthly level and pretty much a quarterly open as well. And of course, looking at the more monthly chart, 28,452 is the new quarterly open and monthly level. So that's quite interesting. It's of course the higher the time frame, the more strong the level is. Of course, the monthly open for March was 23.1k. Of course, 25.3 is a really key level everyone's looking at as well. But if we actually do break outside this choppiness, you have to appreciate that there's actually very little in the way, pretty much till 25k. Because naturally, when we went up here, we of course had this push up here, and the back test, we got somewhat like an SR flip. But we have so many imbalances here, market inefficiencies, and there's a lack of structure here. And so it's very easy for the liquidity to be grabbed if we eventually do get to that 32k run up or 30k that everyone's looking for. And of course, going back down here as well, we form really little structure here, huge imbalance. And we had a wick here and a wick here, hasn't been filled. And of course, down here as well. This is not as strong though. So always be wary of that. But until further notice, it seems yet once again, we are still range bound. I do believe that if we do break above this range here, I think we do this time get that move to 30k we've been itching for. If we do get it, it'll have to be now. And of course, how many times you're going to keep hitting the ceiling? Eventually the ceiling has to break. I also spoke last time as well, particularly this range back in May 2022. And we initially got that good short initially. So this was the volume component around here. The value area low, so the lower end of this high volume area here was around 28.9k, 28.7k. The upper extremity was, so the value area high was around 30.8k. And one of the amazing shorts that I caught specifically, I really wanted a break of the local range high, but also at least a tap of this value area low, and we got that, and eventually rejected. But something else to really be careful of, and a lot of people actually, I was quite surprised that not a lot of people are actually talking about this, but you have to appreciate that 28.9k is quite a strong level because it is a 2021 open. And of course, 27.8 is of course a 2021 low. So for a long time we were actually dancing around this, and eventually when we broke down below this 2021 low, we actually got that pushed down to 27.1k. So please appreciate that. There was only 2 scenarios, and we got the first scenario last week, where we went up like this. We took the local range high, and we had kind of like a deviation play of this and went back down. A more appealing short, of course, would be a run-up, in which we actually potentially take up these lows here. And so potentially if we push above and then consolidate, potentially a push up here and like a false break, and then you'd be really appealing short and push back down. Something to also consider that is that, of course, we're still range bound, and of course a lot of people do expect 32k, and a lot of people do expect 25k. But as traders, the beautiful thing is that we can benefit in either direction. The exact market direction does not specifically matter for us. And so what I recommend is that if you caught a shorts around here or near the top end, of course take profits in the middle of the channel and maybe around the value area low as well, but leave some to run. And conversely, if you get longs around here, it's worth taking some profit in the middle and also the upper end. And so that way, when you cover both sides, it's nice to really benefit in either direction. So this is going back to the 5-day Gaussian channel. And last time I explained how very often, based on past historical data, so for the 4 or 5 times in Bitcoin history, what happens is very often you initially get a rejection of the top band, then you have a retracement. And once you break out of this 5-day Gaussian channel and then retest the top band, which we did, and it was 26.5k, you have to appreciate that this, of course, is a 5-day chart. But once we broke above and then we retested 26.5k, the statistics actually show that there's an average 30 to 40% run-up across the last 4 or 5 times. And so that technically would put us to 32k. Whilst we're range bound, I'm not completely ruling that out. And the thing is that it doesn't have to happen now. We can never predict the exact time it happens, but you have to, just to put on your radar really that, whilst you might have a bearish bias, do not completely go. It's not out of the realm of possibility that we eventually do tag that. Whether we get that 25k region run up, push back down or not. And just looking, for example, what happened the previous times. So going back, for example, to 2020, we initially had a push up rejection and come back down, and again rejection again. Then when we actually pushed back up and retested it, and of course this is a 5-day chart, we actually had a huge run up of 30-40%, and that's similar in other occasions as well. Looking at the longer short ratio as well, something interesting was the last couple of days, so specifically the 31st of March. What happened here was that we had this huge amount of retail shorting here, and this is the longer short ratio of the retail traders, who are generally weaker traders, and then we had a huge amount of open interest, so a net entering of positions, and of course this led to this massive short squeeze, and with this huge run up to really liquidate a lot of underwater shorts. Recently, specifically last night, I think it was a combination of shorts taking profits, but also some underwater longs giving up their position as well. We had this, initially we were around this peak around 28.6k, and we had this huge amount of longer short ratio from the retail side, but then the open interest was decreasing. And so overall, to me, this indicated that there was a combination specifically of shorts taking profit, and perhaps there was some underwater longs who tried to give up the position as well. But now what's happening is that, now we've had a bit of a run up, but if the open interest does start creeping up again as well, and the longer short ratio goes up as well, back above this previous range high, then there's a chance that we might get a further push to the downside. And so that's something I'm not completely ruling out as well. You have to also appreciate that the long short ratio, there's so much change happening in the space on a day-to-day basis. Like the longer short ratio could be 0.5 one day, but then the next day it could be 0.48. And whilst it might seem very minuscule in terms of difference, a lot happens, and from a day trading point of view, it can make a bit of a difference. So that's something to really be careful of. The actual top traders have seemed to be less interested in going for longs, whilst they are 0.52 long. It's nothing crazy. So looking at the actual further market, and specifically this is the SPX, S&P 500, and of course we've had this massive trend line for a really long time, and of course trend lines are very subjective, but it does seem to have been respected. We've had a rejection here, and then initially an SR flip here, and of course then we back tested it here. And going back, a lot of people were so bearish here as well, And of course, naturally, we had that bank FUD and the USDC issues as well from a crypto point of view. But this was a key, really, daily level. This 3850 region, specifically, it was a point of control as well from taking a snapshot of volume from a previous range that I showed in the last live stream. And now we've had this huge push up. Of course, Bitcoin has recently had a dump last night, and then SPX has gone up. And very often, the movements of SPX is very much correlated to the crypto markets, but not always. And there's no harm in just paying attention to the SPX as well, right? I do, however, believe that if we do break this 3850 region and get something like this, then I think it's very likely that Bitcoin does go below 25k. If we eventually do go here and tag this low here, then a potential situation is a false break and a retest and potentially go back up again. Because, of course, you never want to be shorting the support levels. And also looking at the fixed range from the previous time I drew as well, which is quite interesting to look at as well. So this was the huge snapshot from specifically 5th of May 2022 to this current price action. And now we do appear to be near this value area high, so the upper end of this high volume area. And initially we had a rejection, but now we've gone above it. The value area low is around this 3770, 3764 daily level as well. But the question now is, do we make a leg for it and reach this particular high over here? Looking at this more macro volume range here as well, so from past year, specifically 2 years ago, the question now is, if we do break 4,300, and of course this really ties along with the value area low of this region here, then potentially we could get a push to this point of control, potentially in 6 months. Of course, that's a bit of a stretch away, but it's just something to really consider as well and not be completely surprised if it does happen. But so far, I'm not going to get too excited, and it does seem potentially that we could be having some kind of compression here as well. So if I draw a trend line here, so maybe we might get some kind of compression towards these trend lines. And the question now is, do we eventually dance along like this and compress, and then finally have a breakout to this direction, or potentially this direction? Looking at the actual Dixie, so we've pretty much been in this range-bound channel for a really long time, for like more than a decade. And of course, looking at more local price action, this is the lower end of the specific channel. And of course, we had a reaction here. It does seem like we've, again, had some kind of move to the 786 that we pointed out from last time as well. Now we potentially could be finding some kind of local support before another push up. So whilst now we are at this 102 region, the question now is, do we go to this some kind of demand zone around 101.8 as well, and then have a push up? So that's something I'm really looking at as well. Do we really get a push down to this weekly level around 98 around here? So around here, maybe, but it's a bit of a stretch as of far right now. But it's not out of the realm of possibility. Do we eventually, in the next couple of months, do get a push back up here and then a retest and make a leg up? Of course, we need to look at the oil chart as well. We've had recent news about how OPEC has reduced its supply of oil. And from conventional wisdom, generally the case is that when the supply of oil is reduced, naturally the demand and the price of oil can go up, and that can definitely affect businesses, and it could definitely affect their earnings, because naturally they might have more transportation costs. And the other conventional wisdom is that very often when oil goes up, that can have a really bad effect for risk on assets like Bitcoin and crypto, just stocks in general. But it doesn't always have to happen, and very often you have to appreciate that this is already common knowledge. And of course, the chart tells a story. Very often, it's already priced into the chart. And so I wouldn't trade based on that and make a strategy based on that, because you have to ask yourself, do you really have access to that information the fastest? Because that really is the edge in cases like this. But so far, it does seem we've bounced off this daily level around 67 for oil. Question now is, do we eventually tag one of these range highs and potentially go as high as this daily level here? But that could be a bit of a stretch this particular week. But if we do take out structure here, potential scenario could be like back break above and then retest consolidation, potentially move up like that. That's something I'm looking at as well. Looking at the total crypto market cap, of course, 1.18 trillion was a really key area, and that was what we reached around 15th of August 2022, so last year. So far, we've had so many reactions and rejections of it, and which has been somewhat disappointing. So drawing a Fibonacci as well, we had some kind of reaction around this 236. Question now is, do we eventually get a pullback to the 382, potentially the 618? So that's something I'm considering. And very often it's worth definitely taking some of your spot position profits out, specifically when you reach a huge key level of resistance. There's no harm if you take it out, because you can always put it back into pullbacks. Looking at the Bitcoin dominance, we've pretty much been in this sideways range for a really, really long time, so like this. We haven't really gone above 50% in a really long time. It does seem we had some kind of retracement here, so if I pull it from here to here. Yeah, we've been dancing around the 886. We're on 47%. And of course, the Bitcoin dominance is the total market share of total crypto in general that Bitcoin has. And of course, if Bitcoin dominance is going up, Bitcoin does not have to go up in value. And Bitcoin can stay sideways and alts can bleed. But this is just something to really be careful of, because sometimes it can be more lucrative to trade Bitcoin than actual Ethereum. We've actually been realizing that in the recent times. You want to hop on and really ascertain, is the actual pair you're trading actually getting Satoshi relative to Bitcoin? We've pretty much seen this time and time again. The Ethereum dominance has been bleeding for a long time, specifically from the 12th of March. But potentially now it has broken out, but even the last couple of months has been bleeding. And that's why you might have noticed how even if Bitcoin has gone up, its percentage gain has actually been a lot higher than Ethereum, relatively speaking. Question now is, do we get some kind of breakout here? Perhaps then you might consider that ETH Bitcoin pairing dominance is at a local support. Okay, maybe it might take some profits from Bitcoin and move it to Ethereum and trade that. And so that's something to really be careful of. If, for example, you're at a really high resistance for ETH Bitcoin dominance, it's perhaps better just to trade ETH Bitcoin because you're actually gaining Satoshi that way. And looking specifically at the Ethereum chart, okay, well, we actually have broken out of this weekly level, which is nice to see. Initially, we were really struggling around the 17.8, 18K level. And I was saying last time as well how in the total crypto market cap reached 1.18 trillion, which was now a key resistance level around August 2022. And at that point, Bitcoin reached 25.3K roughly as its peak. But despite that, we reached for Bitcoin around 28.9K recently, which was the local peak. But Ethereum still has not been able to regain its local high from 16th of August. And so now, the question now is that now as ETH Bitcoin dominance has reached its local support, do we eventually get that final push up for Ethereum? And is it more lucrative for ETH to trade Ethereum? Guys, that's all I have to talk about. As a quick summary, I think we've pretty much range bound here, and until we actually get a high time frame closure beyond the range high and the range low, we're pretty much range bound. And so don't get too excited. And we've seen time and time again, there's so many liquidity hunts and stop hunts around here and here. It's just gathering liquidity. And very often when you're trading in the middle of the range, unless you're actually trading based on like a strict mechanical scalping strategy, it's very easy to get chopped up. And so if you're in the middle of this range, potentially, and if your entry is there, potentially just enter and get out. But if you're at the extremes of the range, specifically, you might want to lock in the first two, take profits, and then just let the rest run if you want to. Do check out my YouTube channel, which I set up quite recently. It's where I post my passion for crypto and trading and just all the recordings as well. Well, guys, thanks a lot for watching, and I'll catch you in a bit.